Europe's bailed out banks have been hurting the budgets of eurozone countries, and for months EU leaders have debated a banking union. Early Thursday morning, they came one step closer, signing a deal to create a banking supervisor to police 200 of the eurozone's biggest banks, trying to prevent a repeat of the 2008 financial crisis.
J'en conclus donc que l'accord de ce soir est un succès.
I conclude that tonight's accord was a success. We think it's real progress that has also opened the possibility for improvements in the future.
The 17 countries that use the euro are moving towards a full banking union, but that has broader implications, says Spyros Economides of the London School of Economics.
The banking union is the first step towards fiscal integration, which is the first step towards a central political authority. Others will say, no, we want a loose association, perhaps modelled on the one we've got now, which is based on the market.
Under the deal, starting in 2014, the European Central Bank will oversee banks with more than $39 billion of assets. The ECB will also intervene in smaller banks at the first sign that they are getting into trouble. That's a significant handover of national authority, Economides says.
I think what's happening is there's a big debate going on about what kind of Europe we want to see in the future. It's not simply about this crisis, it's about the existence of a particular kind of Europe.
In a further boost for the struggling euro, the finance ministers released a $44 billion tranche of bailout money to Greece. But that will not resolve the Greek debt crisis, says economist Sony Kapoor, director of the European Policy Institute Redefine.
We must remember this wound is entirely self-inflicted, and unfortunately this cycle will continue into the next year.
Kapoor says the EU missed an opportunity to properly address the ailing banks.
When the Spanish banking problems, the scale of the problems first was highlighted, we talked in abstract about breaking the link between banks and countries, where weak banks are bringing the countries down and weak countries are bringing banks down. And on that, we have completely failed to do that.
EU leaders hope the banking union, or single supervisory mechanism as it is known, can be put into place without signing new treaties. But political analysts warn there are more complicated negotiations ahead in 2013. Henry Ridgwell for VOA News, London.